Ian, before the pandemic, there was a school of thought that the Fed was out of bullets, and they proved everybody wrong when they came in with multiple bazookas, so to speak. So as you've watched this, as you've witnessed all of this, what do you say in a general sense has been the overall impact on the bond market?
It's been very interesting, to say the least. Like you said, consensus was really expecting the Fed not to have as many bullets as they did, and they came out and surprised everybody with the breadth and the depth of the programs they've unleashed. And by doing so, they've lifted all risk assets. And I think that caught a lot of people by surprise, but it was necessary. It was necessary to alleviate some of the stresses that were in the bond market at the time, in the front end and with all the liquidity, or with the bond market freezing up. But now we've come to a place where things have gotten a little frothier than they were before.
You mentioned the stresses and the dislocations during the extremes of the market in late March, I guess it was. Are those gone for the most part, or are there still pockets of concern?
There's still pockets of concern, but for the most part, things have alleviated, the stresses have been alleviated. Having the implied backstop of the Fed and almost unlimited money coming in lower rates has helped provide a rising tide for all boats.
So what's the one thing that you've noticed based on the Fed's actions and central banks in general? Is it the high yield area that's been most directly impacted?
Yeah, high yield for sure, and the lower end of investment grade. So think of the BBB low space, and having the actions of the Fed and central banks in general have, I don't want to say 100% taking risk out of the market, but it's given market participants a sense that risk is out. You have an implied backstop. You have someone who's willing to buy bonds at any price, or at least that's the thought. And it's unfairly, I think, brought everything up with it. Some of these companies that were in stress before and might be in stress if not for these programs are trading as if they don't have that anymore. And so I think that's something to watch out for.
Can you give us some examples of some companies that had the Fed not come to the rescue may just have gone under?
For sure. One that comes to mind really quickly is Carnival Cruises. Their stock was crushed. The business model kind of dried up as lockdowns continued, and somehow they were able to raise money for 5 years at 12%, I think. And the demand for that after the Fed action was dramatic. And for a lot of the people observing it, you're surprised that they were able to get that deal over the finish line.
So overall, the Fed's goal was to keep the plumbing going, support financial markets, but have there been unintended consequences where certain things or certain trends have popped up that we didn't expect?
The fact that having the implied Fed backstop has lifted all boats in this rising tide. And so you have some companies whose business models might not have necessarily survived, or they'd be in further stress than they would have. And so the unintended consequences, those companies are now trading very rich, maybe even in line with some of the better positioned companies. And so now you have to tread with caution and do the fundamental work to make sure you're invested in the right companies. So
overall, would you say that within the bond market, there's a sense of calmness, it's fairly healthy, or which you've alluded to, there is, you do need to have some caution, and there's cause for concern, and we don't ultimately know how all this is all going to play out, really? For sure, there definitely needs to be some caution, but I get the sense that market participants are thinking, again, implied backstop, risk has been taken out of the market, so everything is in play. If it's tight, it's going tighter. If it's expensive, it'll get more expensive. And so it also ultimately depends on your view on the next 6 months and how the pandemic continues to evolve. Are we going to continue into a shutdown or a further shutdown? Is everything going to open up, and are we going to go back to normal? And certain things are priced and trading as if they were going to go back to normal tomorrow. But you don't foresee that, or is it just difficult to even know? It's difficult to even know, but my personal opinion is I don't think things are going to go back to normal tomorrow. It's going to take some time. You look at the growth rate of cases in the southern U.S., stratospheric, right? Things are ramping up quickly. You're seeing evidence of, or potential evidence of, second waves in some of the countries that experienced it the first time. Countries like South Korea, countries like China, Singapore, Germany, they're all starting to see a little bit more like an increase in cases again after they thought they'd had a handle on it. And then not to mention some of the other countries like Brazil, India, and Russia, who are just they're just skyrocketing. So it's hard to wrap my head around all that and say things are going to go back to normal immediately. But I think there's a way through it. It's just we have to get there. And lastly, what's the worst case scenario based on what the Fed has done? I guess some would say hyperinflation, which we never saw the first time around after 08, 09. But what's the most dramatic thing that could happen that would be negative?
Inflation comes because you're just pounding money into the market and just printing money willy-nilly just to bail out companies that may not be all bailoutable, for lack of a sophisticated word. And so, sure, the balance sheet of the Fed is unlimited, virtually unlimited at this point, but there comes a time where you have to pay the piper.